Hello, children. Before the vacation, we studied different types of business organizations and their structures. Now we move on to accounting part. First of all, we should know what is the term accounting is. We learned that there are different stakeholders look into the business activities. They expect various things from the business and they have to make decisions regarding future of the business. So for example, here you can see the stakeholders like government, community, consumers or customers, owners, managers and workers, etc. For example, if you take government, wait for collecting taxes and they want to know how much profit is earned by the business. Owners expect more profit and the security of the investment. Managers, workers expect salaries and bonuses, etc. So, businesses should provide the information regarding business activities as an understandable manner because different stakeholders comes from different educational backgrounds. Therefore, it should be understandable for all. Therefore, the function of accounting can be defined as a process of providing information required by the interested parties of a business for their decision making. First, we discuss what is a process. Process should have inputs and going on some activities to change the quality and quantity of inputs and produce some outputs. Here, business transactions and events are inputs and process is there to summarize and analyze them and produce financial statements as outputs. Here we discuss only on financial accounting that will produce financial informations only. At your higher studies, you can learn other than financial accounting, management accounting, HR accounting, and environmental accounting, and stuff like that. As we discussed earlier, providing information is the main objective of accounting. Based on this main objective, there are various other few objectives we can mention here. Like first one is adequate profit. Without profit, you cannot do anything because it increases the ability of the business. Therefore, owners of the business especially focus on the profit or loss earned by the business. Therefore, objective of accounting is to produce a correct or accurate amount of profit what business earned at the end of the period. Second, sound financial position. Financial position is to show how collect funds and how they invested in different sources. Like in your house, your mother and father earn salary as income and spend that in so many uh, expenses like consumption expenses, your educational expenses, and some hospital charges, etc., and keep some portion as savings for your future requirements. Likewise, businesses is also do the same thing. They collect funds from different sources and invest them in different size of sources of resources. That is we called as financial position. Third one is to fulfill legal requirements. One of the objective of accounting is to fulfill legal requirements. That is, for example, for government has to charge taxes from companies and businesses. So they want to know how much profit or loss earned by those companies. Fourth one, organize financial activities. Accounting needs to organize financial activities of the business entity because accounting is a methodical procedure. Therefore, doing accounting, frauds, errors, and mistakes will be minimized. Those are the few objectives of doing accounting process. In order to fulfill above objectives, businesses provide various types of reports to stakeholders. These are commonly known as financial statements. That's why I earlier told that the financial accounting is a process which provides financial statements as output by using business transactions and events as inputs to the process. Okay, now we move on to business transactions. In this picture, you can see two people try to exchange things. One has cash and the other has a barrel of crude oil. After these transactions, the person who has cash will become an owner of a barrel of crude oil and the other one will have money. Now you can understand the resources of the people has changed due to the transaction. Therefore, you can simply define a transaction as an exchange of resources between the business and other parties. Few examples for business transactions are monthly salary payment of rupees 50,000, selling goods of rupees 10,000, obtain a bank loan of rupees 50,000, etc. And there are two types of business transactions. One is cash basis. Cash basis means the lady who is in this picture give money to the seller and seller offer shoes to the lady. Therefore, the exchange of resources is doing on the based on cash. Therefore, cash transactions can be defined as the value settled at the point of exchange or at the point of sale. The other one is credit transaction. Here you can see a person is purchased a vehicle by giving a credit card. Credit card means the money will come after the sale or after the point of exchange. Therefore, credit transaction is the value settled after the point of sale. Events. Events are losses have to bear by businesses and they do not have control over them. For example, if the building of a business is destroyed due to fire, businesses cannot do anything about it. They have to bear that loss.